Hello, ladies and gentlemen. Welcome to Bitcoin Summer. I'm your host, Brian. Thank you for joining me. We have a lot to get to today. We're going to be skipping over our lightning episode of the week because we have a lot to get to with what's going on in the market. So without any further ado, please like, please subscribe, and enjoy the show. Okay. Everyone take a deep breath. What is going on in the market? Why is this happening? The sky is falling. Please, ladies and gentlemen, take a breath. We're going to get through this. Everything's just fine. Bitcoin fundamentals haven't changed. In fact, they're consistently getting better, day after day after day. But there's a lot of market manipulation going on right now. There's a lot of giant wallets dumping on the market, and then wouldn't you know it, buying at those levels that they're bringing and those liquidations to. So what we're going to do today is just kind of go over exactly what's going on, kind of a broad stroke. We're not going to get too granular, but I have some sensibilities that we could be reaching a bottom right now. That being said, we could hit another 5% down, possibly, maybe even 10% down at this point. We just don't know. We don't know. Investing is a game of probabilities. And why I love Bitcoin so much is the probability of Bitcoin reaching $500,000 or a 10x from here, $500,000. The probability of that within 10 years, I would say, is very, very high. So I have placed my portfolio heavily into Bitcoin to benefit from that upside, that potential upside. Nothing is a guarantee in life. Nothing comes easy when you're talking about life-changing wealth. The patient get rewarded and the impatient get slaughtered. And just ask the people who bought NFTs in 2021. Or a wide number of shitcoins right now, just bleeding out way heavier than Bitcoin right now. Not saying they won't outpump Bitcoin in times of green, because people are greedy. But this is what happens when the shit hits the fan. The shit coins really hit the fan. And it's a very, very dangerous game. You don't know when they are going to rug pull on you. So be very, very careful out there if you're dabbling in that. I prefer Bitcoin myself. I'm not telling you what to do. It's a free world out there. So go on and enjoy it, but just know the risks when you enter something. And there are risks involved with Bitcoin as well, as we have seen. So if you're over-leveraging yourself, they're going to hunt you out. And we're going to go over that today. Exactly what I mean by that. But as you might be able to tell, we're a little bit different angle today because I wanted to try to get out the reflections off of my glasses. Unfortunately, I am a 4 eyes and contacts are pretty uncomfortable for me. So I had thought about it for doing it for videos, but it just doesn't really work for me. So I'm just trying to do a different angle. So hopefully this works a little bit better and I won't look like I have a robot eye going on like I did the last couple episodes. So apologize for that. But let's get right into it. Where are we now with this market dump? First, I think we should take a step back and take a look at where we were not too long ago. And where we were at not too long ago, I just want to bring it back to March of 2020, kind of when everything, as far as how I felt about Bitcoin, tumbled into how I felt about the world. And the reason being is because we saw this huge market sell-off in March of 2020. Businesses were going to be in danger. Businesses were going to make less earnings. So it should have been a time to buy in the market, and it was. But things didn't go down as much as I wanted them to. I was waiting in cash and ready to buy. I had a shopping list ready to go. And I've talked about that at length on this show before. Now, what Bitcoin did was go down to about, as you can see here, the low was $38.50 on some exchanges. $3,850 in March 2020. And it recovered faster than anything else. And it blew past everything else once it recovered with everything else as well. Went back to new all-time highs and blew past that. Made it new all-time highs, blew past those. Went to 64,000, went back down to 30,000, went back up to 69,000, and now here we are, just under $42,000. If you can't handle that roller coaster, you're not going to be benefiting from when we hit levels of 69,000 again or beyond. You just aren't. And that's okay, because this isn't for everybody. This is very hard to take when you watch your net worth go down by that much, which is why I do advise, not me personally, but I do advise people out there to not put a large to of their net worth into Bitcoin, because it is just too dangerous, especially when you have a family to feed or you're not a spring chicken anymore. Now, where we're at is an amazing accomplishment. Now, we are below $1 trillion in market cap, but a $1 trillion or close to $1 trillion market cap asset is starting to be a very significant asset in the eyes of the financial world. And it's starting to become a real, true asset class. Bitcoin itself, not cryptocurrency. Bitcoin itself is becoming an asset class. And people still lump it in with crypto when you hear on mainstream media or people talking about it just in general, people who don't own any Bitcoin. You hear it all lumped together. But the big players know that the safe asset is Bitcoin. And it's almost as if it is becoming the new gold for them. And I think it's beyond the digital gold narrative, but it's a good starting point. And if Bitcoin were to reach the market cap of gold, we would be looking at that $400,000 to $500,000 per coin level. But I think we don't have to worry about these short-term price movements unless you are doing trading. And you can make money on these up and down moves. Now, I am basically a permabull when it comes to Bitcoin, and I'm a permabull when it comes to my Bitcoin summer portfolio. So I've been sharing that on the show for the last couple months now. And yes, it's getting hit super hard. But I was doing some math today, and it looks like I'm only down right around 17%. Even with this crazy drawdown. Now, a lot of you may think that that seems like a lot. But when you have, you've worked out the probabilities and you are only down 17% compared to the 3x or the 2x that you were planning on getting to, sometimes you have to bear with some short-term weakness with those assets that you're holding on to. If your fundamentals haven't changed, your attitude towards those holdings shouldn't change either. And it's a very hard thing to do with investing. And I've learned the hard way not to cut too early or not to hold on too long. I've learned that it's been painful. But I can tell you that when you do it correctly, when you hold on through that strife, when you know that the storyline hasn't changed with that particular asset that you're talking about, the rewards are insane. They are unbelievable. And it takes a long, long time. And even these past couple weeks, my patience has been tested. And coming into year end, thinking we're going to be 6 digits, and beyond, and, spending that money already and thinking about all of the things and all the great things that it's going to, the comforts that it's going to provide my family, it's painful when you see the drawdown. But you need to stay grounded in this market and stay level-headed. If you start letting your emotions take over, you're going to start making some stupid moves in the market. And I just don't think that I have even been completely all there the last month, let's say since December 4th, when we had this washout. And I was doing some introspection, and I'm kind of to the point now where I've been through 50% drawdowns of Bitcoin. I've been through 75% drawdowns while holding Bitcoin. But that was when I had less of my wealth wrapped up in it. But I've also seen the thing go from $3,800 to $64,000 within a year. And that's nothing compared to what it could do. And watching all of this supply getting wiped up right now, I remain bullish, obviously long term, and even a little bit short term right now. Medium term, super confusing with what the Fed is doing right now. And they are even giving the market mixed signals. And this is kind of what I wanted to share with you today at the top here, is definitely a Orwellian type of a thing going on with Fed speak. This is not uncommon with Fed speak. It is actually pretty regular thing with them, is how they twist words and use words to their benefit. And it just goes to show you that they don't know really what they're doing, and they're just trying to play this game of, they set the bumpers up in the bowling alley, and they're just tossing wildly because they know that when you get close to that gutter, there's that guardrail. Now the guardrails are starting to wear thin a little bit, and we're starting to see them scramble. And just yesterday, this is from one of the Federal Reserve dudes, inflation is a repressive tax. I take it really seriously. That is a true statement. It's very repressive, and it is a tax. It's a tax on your purchasing power when you're forced to hold US dollars and use them and pay taxes with them and pay your expenses. Now, today, the same guy goes on TV and says, he warns against premature, aggressive action to get inflation down. So I've been saying this all week on Twitter. We're going to start seeing them leak out certain things to tame the tantrum on the stock market, because we've seen weakness this entire week now. And I don't think we can go much to 5 or 10% shaved off of the S&P without them really getting out there and being like, yeah, maybe we aren't going to raise rates. Maybe we aren't going to taper so aggressively. We're seeing bond prices just skyrocket because they're not, they're reducing their purchases of bonds, which, the price of bonds go down and the interest rates of those bonds go up. That's how it works. So as soon as this guy went on Squawk today on CNBC, look at this. This is where it was right here. And just a wild swing within a day. I mean, we did see a sell-off towards the end of the day, but this just goes to show you that they are going to be doing this for probably a good couple months now. Unless they come out and say, we were just kidding, guys. We're not going to do this. I think they are pretty serious about tapering at this point. But they know as well as anyone who knows math that once they start tapering in earnest, this stock market, what happened in 2018 when this happened, everything sold off. I got some Apple at a really, really discounted price because of it. And this is when folks like me and folks like hopefully you are buying. When people just feel sick to their stomach and they're just selling. This is when the smart money is buying. And that's what they've been doing. And just really, not with the S&P 500, but they have been buying a ton of Bitcoin. And I think we'll continue to buy. And it will be the ultimate inflation hedge. It just isn't for the broad market right now. I think it will get there, but it's just not that. It's not a risk-off asset yet. And I think it will be, but it's still very much risk-on. And it is very correlated with the Fed movements right now. Now, I drew this right when this huge wick down happened, and everyone was expecting it to go down to this level yet again. And here we are, just below it. And could we go further? Yeah, and it did wick down way below it. But we saw this very similar in the summer, during the summertime. And it's a very similar look as we are seeing right now. Kind of a fake out, pop back up, and then a pop back down. And what we did was go and actually break and wick past and even closed past this first initial wick. This is not out of the ordinary for a Bitcoin correction. And a lot of people are losing hope. And this just happens regularly with Bitcoin. And if you can't handle it, you're not going to be able to appreciate the insane gains that happen because of this same thing, this scarcity of supply. It's so easily manipulated down when there aren't buyers coming in. But when there aren't sellers coming in, it's just as likely to go parabolically up as it is down. And this is how we position ourselves in the traditional market, and this is how we should be positioning ourselves in the Bitcoin market as well. And I just wanted to make sure we all knew that. And yes, it's a scary time, but we're kind of bouncing off the top of this trend line. We moved out of it during Christmas week, and then we kind of consolidated, and then it was a Bart Simpson, flat top and then back down. And so we consolidated again and then fell down again because people were leveraging long, and then when you get liquidated, they're forced to sell. So that's the same thing that goes with shorting. And when shorts get squeezed, they are forced to buy, and it moves in the opposite direction. And we are just kind of in this zone right now where we just don't know which direction it's going to go. And in fact, there still is a ton of open interest on the market, and we don't know whether the squeeze is going to be to the upside or the downside. But if you follow folks like Will Clemente on Twitter, he's been saying that, even with this down move this last week, we could see more, and we will probably see more, and it will probably be very soon, and it could even happen this weekend, possibly. We don't know. If so, put on your big boy pants and take a deep breath, and we're going to all get through this. But we could see another big wick down. But that being said, it could also be a short squeeze as well. But, we're going to see some crazy volatility coming up within the next week or two, even more than we've seen this week. And we don't know what direction, and I know that sounds ridiculous. It's like, yeah, it could go up, or it could go down, or it could go sideways. Well, I don't know if it can go sideways for much longer. We're going to see some of these this open interest being washed out for sure. There's no doubt in my mind. You know, I did want to talk about what is happening with the price manipulation for sure. And it's exchanges like FTX. They offer a ton of leverage on Bitcoin, an already volatile asset. You know, when you add on more volatility to an already volatile asset, this is when they can take advantage of you losing your shirt. And they are. They have been in charge of this liquidation for the most part. And lo and behold, they are the ones that have their bids set at right around $40,000. That's right. It's $38,000 to $40,000. Tons of bidding going on. And I don't think it's just them, but I think it's other giant institutions, because they are sopping up so much coin. This isn't just retail, and retail hasn't been here for a long, long time. Besides plebs and people who just stack on the normal, on the regular, no one's in this market anymore. And that's why you're seeing NFTs just get obliterated. Now, why is FTX buying right now? I mean, they have, you know, you're the product when you're on an exchange like FTX. And they happily admit they will force liquidate you. Because guess what? They get your collateral. They get your Bitcoin or your stablecoin, whatever you put up as collateral. When you get liquidated, they benefit greatly. It's probably their most important revenue stream. They've admitted this. This isn't a secret. They stay up all night, all day, all night, and just find liquidations. And what they're doing right now is liquidating so low to a level that they're actually buying too, which is typically the case, but they're buying in droves here. This is a huge amount. And, you know, my big question and my takeaway from this week is, number one, when does the bleeding stop? Have we bottomed? Have we bottomed right below 42,000 here? And my follow-up question to that is, how long will FTX hold on to this Bitcoin that they're buying? How far will they ride it up? Because obviously they see some upside. Now, these are the big players in the field right now, you know, as well as banks and as well as institutions we'll talk about in just a little bit. But these are the big guys that are making the market right now. They're making the prices. And how long are you guys going to sell to them in panic? You know, I think that the sellers are getting exhausted at this point, and only the true believers and the true holders are hanging on for dear life. But, you know, I think we're running out of people that even have Bitcoin to sell anymore. And, you know, I think once we start seeing that, I think we will start seeing short squeezes and start rising out of this range. That being said, I don't know how far we go up, and that's why I'm so curious about what FTX sees as far as potential upside for 2022, at least in the short run. Like are they going to ride it to that $53,000 level? Are they going to bring it back up to all-time highs to 70,000 again? To be seen. But I'm positioned for them because I have found it's a very good practice in investing, or now I'm finding out in trading, is that, you know, us as individuals, we can't move the market. We have pennies. I mean, fractions of pennies compared to what these companies have. And so the only thing that we can do is kind of follow in their lead and spot what they're doing or what their plan is, and either front run them or just be a little bit behind them and follow that up or down and wherever they take us. It's been a good strategy. You know, back in the day when I was buying stocks solely, it was always a good sign when companies were buying back stock. I mean, it's not always a good sign. When we're at all-time highs, probably not a good sign, probably not a good use of their money, but it's a better thing than just sitting in cash. So, I mean, it's debatable, but my point being is when the big players are stepping in as buyers, you have to wonder why. Because I don't think they'd be committing this much capital to not only selling into an already weak market, but now accumulating at the bottom of this trend right here. So it's just an interesting thing to me. And what I will be looking for in the coming weeks, just to let you guys know, is first off, I want to really hold this 39.5 level, or else I think we might see some further weakness down into the low 30s potentially. Who the heck knows anymore? But I think, I don't know why I can't draw that line here, but anyways, we don't want to dip below right around the last low, because that has set a pretty good floor, and it's actually set a pretty good floor back in July as well, when we saw the lows during the summer. And so you look back at the last lows, and we held this pretty good. We even didn't wick down below that last, last January 2021 low. So I don't want to see us break 39.5, but we definitely could. And like I said, maybe this last set of liquidations might bring us to that level, and I would be a heavy buyer down here for sure. Now, if we see it go and not bounce off that line, and we see it just cascade down, like I said, we might be seeing the lower 30s. But what I'm actually looking for are these Heikin-Ashi candles, because this is a really true momentum indicator. And it's simple to me to visualize, so that's why I like using it. So let's just take a look here. The run up into last March, you see no bottom candle. So what Heikin-Ashi is, actually I should go back a little bit, take a step back. Heikin-Ashi candles, you take an average of the previous candle. It's an average. It smooths out the differences, though. Take a look at the difference here. So you see, you just don't know. Like, it just kind of looks like, there's no discernible trend really. Sometimes it looks like it's going sideways. You can't really tell. But when you take an average of the candles before you and the candles in front of you, it smooths everything out. So as you're seeing on this run up, besides this little hiccup right here, you see no wicks below, or at least very little wicks below. So you're in an uptrend. And then when you see red, obviously, and many red in a row, and you see no wicks above you, that's a good sign that you are in trouble. And it's a fail-safe way to do it. And sometimes you'll see these reversal candles. You'll see a wick above and below, and it's a fake out, and it goes right back to that. And that's what happened during the last week in December. And this is a weekly chart, by the way. And the last couple weeks, I should say, in December. So fake out, and then now no wick above again. So we're going to be in this trend for the foreseeable future. And until we start seeing these types of candles with wicks above and below again, or a skinnier box, candle box, we will probably be moving in the downward direction. Or, as we kind of have been doing, is more of a horizontal direction, but these Heikin-Ashi candles definitely smooth it out. So it's very visually clear that we're just in a downtrend right now. So I'm looking for a green candlestick reversal. And we could see that next week for sure. This this candle closes on Sunday. And, not a lot of hope for the rest of this weekend, but it still could happen. We could see a run up to 49,000. Not super likely unless some huge news came out. But next week might be a better bet for starting to see a turnaround. Or we could print one of these skinnier bodied candles next week and see a wick up above and below. And then I would be way more bullish as to making a reversal and start printing these green boxes again. So that's what I've been looking for. The simplest way, I've been looking at a couple other different indicators, but again, Bitcoin likes to break indicators, or at least the market makers like to break your hope. They really love to do that. And speaking of market makers, I wanted to go back to actually a previous episode and play a little bit of video, because this is banks shitting on Bitcoin, and I just want you guys to see, because it's super relevant as to what happened this week. So let's take a listen to this. So let's break it down one by one. JP Morgan, Jamie Dimon, big hater of Bitcoin, fought its adoption. In May, he kind of acquiesced, sort of. He said, "I don't care about Bitcoin. This is May. This is May of this year. I have no interest in it. On the other hand, clients are interested, and I don't tell clients what to do. Customer demand is forcing their hands." Bottom line. So July 22nd of this year, it was announced through Reuters. This can be found online. JP Morgan will allow all of its wealth management clients access to cryptocurrency funds. A couple of the 4 products they will offer is GBTC and Osprey's Bitcoin Fund. They are not allowing their poor clients to buy Bitcoin or even get GBTC, even get a proxy. So let's break down Bank of America's journey. So they warned back in January of this year that Bitcoin is the mother of all bubbles. Bank of America's will is being bent by customer demand as well, though, as we'll see. CoinDesk reports July 16th of this year, Bank of America has approved the trading of Bitcoin futures for some clients. I wonder who those clients could be. Probably wealthy clients. The big money is entering. Get in before them, folks. Citigroup, June 25th. Can you see a pattern here? Middle of the year. Oh, everyone's acquiescing. Their customers are screaming for this stuff. They're screaming for Bitcoin. Citigroup establishes Digital Assets Group, quote unquote, within its wealth management department. They're going all in and even go as far as offering NFT and other highly speculative crypto. So Citigroup is even going way crazier on the risk spectrum end. They are not shying away from this. In March, they stated that Bitcoin is on the tipping point and could become preferred currency for international trade. Citigroup, pretty bullish. One of the big 4 banks, pretty damn bullish on Bitcoin. Wells Fargo, May 19th, 2021, Wells Fargo set to offer crypto fund to rich clients. Also, it was just announced that they are now hiring crypto positions that have been posted online. Here we go again. The only people that will be getting access are the top of the top. Big money rushing in first. So I think we get the picture on that. Now, the reason why I wanted to play that video is because in 2021, it seemed like the banks finally stopped fighting the tide. And the very interesting part of that is that they were only willing to offer it to their wealthy clients first. And I think that's the reason why things have been so quiet last half of 2021. I mean, we saw that run up to 69, but it was basically a fake out. And we basically moved sideways throughout the year, after the spring. And I think the reason for that is because they want their wealthy clients to be exposed to Bitcoin before it goes up parabolically. And I think it's why we've seen the market sell off so dramatically and stay muted. And it's why they approved only a futures Bitcoin ETF, so they can manipulate the market even further. and hedge their bets on the future side of it as well. I think it's why we're seeing deliberate media attempts to recycle the same boring stories about Bitcoin using too much energy, when washing machines use dramatically more energy than Bitcoin, and video games, and even YouTube searches. Just YouTube searches alone is more energy usage than Bitcoin in the entire world. But we keep seeing the FUD heavier and heavier and more directed at the same exact time. It's all an effort to make sure, like as always with traditional finance, that the wealthy benefit first. But the beauty of Bitcoin is that we can opt in, or actually opt out of that system, but we can opt into Bitcoin right now. And in my opinion, at a very, very valuable price. Now let's take a look here now what JP Morgan says, and this is just recently. JP Morgan says Bitcoin is particularly well designed as a modern store of value, and the strong design has contributed to the increased confidence in value of Bitcoin. Wow. What a change of attitude. I don't think it was Jamie Dimon that says this. He still hates Bitcoin. But who knows, where they're leaking this from. But Dennis Porter brings up a good point here. Step 1, use media to crush prices. Step 2, buy assets for cheap. Step 3, use media to pump prices. Step 4, rinse and repeat. So spot on. So spot on. Goldman Sachs, Bitcoin is a macro asset going through a social adoption phase. Yes, it is. Change of tune. Goldman Sachs in 2015, this is a good one, we'll just make our own Bitcoin. Goldman Sachs in 2022, Bitcoin is here to stay. What happened to making your own Bitcoin? Mark Yusko, who runs Morgan Creek and is heavily a part of the NYDIG effort, and just a great spokesperson publicly for Bitcoin. Now, this is, to me, confirming, this is a big player, and he has his finger on the pulse of the markets for sure. And he definitely agrees with Dennis Porter on this point. And it's a nice translation of what traditional finance is telling us. And here it is. We have sufficiently depressed prices enough through spoofing the futures markets and filled our bags that you plebs may now resume your acquisition of sound money. Now, I 100% agree with this. There's no doubt in my mind that the market is being manipulated right now. Bitcoin is so scarcely traded because so many people who believe in Bitcoin have locked up their coins, including me, into their own cold storage wallets. It is not available, or will never be available, on exchanges ever again. And the exchanges are running out of liquidity. So this works in both ways. The price can swing wildly lower, and the price can swing wildly higher. And I'm going to position myself for when it rips higher. And whenever I feel that pit in my stomach, like I'm making the wrong decision, like I'm going to lose even more money, I should have sold at this level. Whenever I feel those feelings of emotion, I know that it's time to buy. It has served me so well in the past, and odds are the probability is that it will serve me again in the future. Thanks so much for joining me today. This is Brian on Bitcoin Summer. Please please subscribe if you like the content today, and we will return to our regularly scheduled schedule next week with our lightning episode and then our everything else episode. So please stay tuned to that subscribe button so you don't miss out on all of the great content. Thank you, folks, and enjoy your weekend.